Most traders lose because they overcomplicate everything. This trade took less than 2 minutes and paid a clean 2 reward, no indicators. No complex analysis, no screen time, just a simple 4-step checklist that shows up almost every day. You simply follow the same rules every time you enter a trade. To prove that this isn't just theory, I'll walk you through real trade examples on popular markets like crypto, forex, and gold so you can see exactly how it works in real conditions. This isn't meant to replace your current strategy. Think of it as a framework you can plug into what you already use. Whether you trade price action, trends, or your own system, this checklist can help you improve your entries and timing. Before we jump into the rules, make sure you watch this video till the end. Missing even one step breaks the entire setup. For this scalping strategy, we need 3 strong consecutive candles with large bodies. The wicks should be relatively short, the cleaner the better. Most importantly, there must be no opposite-colored candle between them. Not every candle qualifies. This setup must form clearly and decisively, with no ambiguity. These 3 candles can form on any time frame, which means this strategy is technically tradable across all time frames. However, later in the video, I'll reveal the specific time frame I personally use, the one where the win rate increases significantly, reaching up to 76%. So don't rush. For now, focus on understanding the structure of the strategy. After the 3 candles form, we also need a fair value gap, FVG, inside this 3-candle move, exactly like the one you see on the screen. Now comes the most important part of the strategy. We need a final candle that appears immediately after the 3 strong candles. This candle should have a small body, sometimes a long wick, and ideally be the opposite color of the previous 3 candles. This candle represents market indecision. After a strong, impulsive move, this is the moment where doubt enters the market. Many traders hesitate here, and this hesitation is exactly where our edge begins. We now mark the high and the low of this indecision candle and extend these levels to the right, preparing ourselves for the trade. Watch this carefully. This part decides whether you win or lose this trade. Let's jump into the real chart now and break this strategy down step by step. I'll use Euro-USD as an example. Step 1. 3 strong consecutive candles. Step 1 is identifying the 3 strong consecutive candles. Look for fast price movement. 3 candles with large bodies, short wicks, and most importantly, they must be back-to-back. Like the ones you see here. Keep in mind, on real charts, patterns are rarely perfect. They won't always look textbook clean, so always allow for natural market variation. Now we confirm the setup by identifying the fair value gap. Here is the FVG inside the 3 candles. This FVG sends us a message. It confirms the strength of the move we're about to trade. We are not looking for random entries. We want confluence, and the FVG gives us that extra layer of confirmation. Step 2. The indecision or range candle. Step 2 is the appearance of the indecision candle. A small body, sometimes a long wick, and ideally the opposite color of the previous 3 candles. This candle shows the market pausing. After 3 strong candles, some participants try to stop the move, but once this hesitation is broken, momentum usually returns, fast and aggressive. This is why we mark the high and low of this candle. This creates our range box. Now we wait. Like a hunter, we stay patient until price breaks this box in the same direction as the original 3 candles. Step 3 is the breakout confirmation. Step 3 is the breakout itself. We need a strong breakout candle with a solid body. This candle must clearly show commitment. It must answer one simple question: can I trust this move? A candle like this one, strong body, clear direction. This is our confirmation. Step 4. Entry, stop loss, take profit. Now it's time to execute. We enter the trade at the open of the next candle using a market order. The stop loss is placed safely outside the range box. Pay close attention to stop loss placement. Never place your stop too tight. a tight stop is one of the fastest ways to lose good trades. And now the best part, the take profit. To keep things simple and consistent, we use a fixed risk-to-reward ratio of 1 to 2. No guesswork, no overthinking. Every trade follows the same rule. At this point, your only job is patience. Let the trade play out. And as you can see here, price reaches the take profit quickly, delivering a clean 2R win.
Now let me show you another example on Bitcoin. When a strategy works on Bitcoin, a market known for volatility and aggressive moves, it means this strategy can be traded on any financial market. I start by identifying the 3 strong consecutive candles. Very clearly, I can spot the FVG inside these candles, which gives me a much better perspective on the setup. Now I wait for the indecision candle, also known as a range candle. And here it is, exactly what we want. I mark the high and the low of this candle's wicks. This becomes my trading zone. Now I wait patiently for a strong candle to break out of this zone. And once that happens, I must enter the trade immediately at the open of the next candle. No hesitation, no second guessing. I place my stop loss safely outside the range box. And as mentioned before, my take profit is fixed at a 1 to 2 risk-to-reward ratio. At this point, I've done everything that's required from me as a trader. Nothing else is under my control. So now I wait, because learning how to wait is one of the most important skills in trading. The secret to profitability is simplicity and patience. Always remember that. And finally, price reaches take profit and the trade closes with a clean 1 to 2 reward.
Here are several more examples from recent days. Most of them hit take profit. Some hit stop loss, and that's completely normal. Losses are part of trading. They can't be eliminated, only controlled. This strategy has a 76% win rate. Experienced traders know that a system with this win rate and a 1 to 2 risk-to-reward ratio can completely transform long-term profitability. The real edge isn't getting rich in one trade. The real edge is consistency. Now let's talk about the time frame I personally use for this strategy. Before we continue, don't forget to subscribe to MetisFx, like this video, and share it with your trader friends. And stay till the very end because I'll also share an even simpler strategy with a higher win rate and a professional risk management plan that shows you how a few good trades can outperform months of random trading. Watch it yourself, and you'll see there's no hype here, just structure, logic, and execution. The 15-minute time frame works exceptionally well. It provides frequent opportunities, enough time to analyze, and enough time to execute calmly.